Let me ask you something. What if I told you there's an ETF out there paying a 99% dividend yield? Yes, you heard that right, 99% annualized. Would you think it's a scam? A glitch in the matrix? Or maybe just a ticking time bomb wrapped in a shiny wrapper of weekly payouts? Scene 2, teasing the deep dive. Well, it's none of those. Or perhaps it's all of those, depending on who you ask. Scene 3, introducing MST. In this video, we're peeling back the layers of one of the wildest ETFs on the market right now, MST, the leveraged MicroStrategy Bitcoin income fund that just made its first dividend payment. And oh boy, it was a big one. We're going to talk about how it works, what makes it different from its calmer cousin MST, and most importantly, whether this eye-watering dividend is sustainable or just a sugar high from Bitcoin's recent rally. Scene 4, invitation to the deep dive. So if you're chasing income, love crypto, and aren't afraid of volatility, grab a seat, because this is going to be one of those deep dives where you walk away thinking, should I be worried or intrigued? Scene 5, jump in. Let's jump in. Alright, let's start with the headline. The MST ETF just paid its first ever dividend, and the numbers are shocking. On May 20th, it distributed 33.5 cents per share for the week. If you annualize that, we're talking about a 99% yield. Scene 2, emphasizing the weekly payout. Yep, not monthly, not quarterly, weekly. Scene 3, describing MST. Now to be fair, this is a leveraged ETF, and we'll break down what that means in a bit, but it's important to understand this. This isn't your grandpa's dividend-paying stock. MST is not pretending to be some sleepy utility paying 4% a year. This is a beast of a fund that blends two explosive elements: MicroStrategy's wild stock price, and options income from credit spreads, into a weaponized income machine. Scene 4, providing context for context. That 33.5 cents was paid out on May 20th, with a record date of May 21st, and the distribution date is May 22nd. So this is real. This isn't theoretical income. This was money hitting accounts, weekly. Scene 5, reaction to the numbers. And when people saw that number, well, the jaws hit the floor. Scene 6, cautionary note. But before you throw your entire paycheck into this thing, let's break down how MST actually works. Because when you dig a little deeper, you'll realize there's more to the story than just a high yield. So what exactly is MST? The MST ETF is a leveraged income-focused play on MicroStrategy, which, in case you've been living under a rock, is essentially a Bitcoin proxy. MicroStrategy's stock moves with Bitcoin, sometimes even more than Bitcoin. And MST takes that already volatile stock and gives you 1.5 to 2 times leveraged exposure. Scene 2, additional features. But wait, there's more. MST doesn't just ride MicroStrategy up and down. It layers on an options income strategy, specifically through credit spreads, which are designed to generate weekly income based on MicroStrategy's sky-high implied volatility. Scene 3, plain English explanation. In plain English, MST is betting that it can squeeze weekly income out of MicroStrategy's wild price swings using smart options trading, while also riding the rocket ship up when Bitcoin surges. Scene 4, capital appreciation first. That's why this fund is such an attention grabber. It's capital appreciation first, income second. In contrast to its sibling fund, MSTY, which we'll talk about shortly, MST is trying to shoot the moon with leverage and top it off with weekly income sprinkles. Scene 5, teasing opportunity and risk sounds spicy, right? Well, it is, and that spice comes with both opportunity and risk. Now here's where the rubber meets the road. Let's talk about that 99% yield. Is it real? Is it sustainable? Or is it just a flash in the pan? Scene 2, nuanced answer. The answer, like most things in investing, is nuanced. Scene 3, options credit spreads. On one hand, the income MST is generating comes from options credit spreads, which thrive when the implied volatility of MicroStrategy is high. And with Bitcoin swinging like a pendulum lately, MicroStrategy's implied volatility has been through the roof. That creates a perfect storm for collecting juicy premiums through options selling. Scene 4, expert opinion Todd, the guy who's been analyzing this stuff in detail, argues that the yield is sustainable. For now. Scene 5, conditions for sustainability. As long as MicroStrategy remains volatile and Bitcoin continues to whip back and forth, MST can keep harvesting weekly income from those movements. Scene 6, the catch. But here's the catch. If Bitcoin enters a quiet phase, if it goes sideways, consolidates, or loses steam, the implied volatility drops, and so does the premium MST can earn from its credit spreads. Scene 7, potential outcome. That 99% yield could shrink fast or disappear altogether. Scene 8, conclusion on yield. So yes, this yield is real, but it's also conditional. It's a function of volatility. And volatility, as we all know, is not guaranteed. Now let's talk about the elephant in the room, leverage. MST is not your average ETF. It's designed to give you 1.5 to 2 times the exposure to MicroStrategy. And MicroStrategy itself? That's a stock that can move 10% in a day, sometimes up, sometimes down. So when MSTR rips higher, MST can absolutely fly. We're talking outsized gains, weekly payouts, and the kind of growth that makes your portfolio screen flash green. But in a downturn, that leverage cuts the other way. Because MST resets its leverage daily, it's vulnerable to decay during choppy or negative markets. If MSTR trades sideways with lots of back and forth, or if it starts to trend lower, MST's performance can deteriorate faster than you'd expect. You're not just magnifying gains, you're magnifying the chop and the pain. However, there is a perk here for more advanced investors: margin requirements. Unlike MSTY, which typically requires 100% margin, MST often qualifies for reduced margin requirements, 50% at E-Trade, and even 40% at Fidelity. That makes it a more flexible tool for margin-based strategies, if you know what you're doing. Let's break it down side by side. MSTY is the original sibling. It sells covered calls on MicroStrategy, collecting monthly income. It's designed for stability, not fireworks. But the upside is capped. Your gains are limited because you're selling calls. MST, on the other hand, is MSTY on steroids. It sells credit spreads for weekly income instead of monthly, and it doesn't cap the upside in the same way. Plus, it uses leverage, so when MSTR runs, MST can run harder and still get paid weekly. That's why Todd calls MST MSTY on steroids. It's riskier, it's more aggressive, it pays more frequently, and it's built for people who aren't afraid to chase yield while still aiming for serious growth. This is the million-dollar question. Who is MST for? If you're someone who believes in Bitcoin's long-term upside, wants income from that belief, understands options, leverage, and risk management, then MST might be a tool worth exploring, but, and this is a huge but, it should be treated as a small slice of a well-diversified portfolio. Todd himself recommends limiting exposure to 3 to 5% max. Because here's the truth, this is not an ETF for your grandma's retirement account. This is a high-octane, high-risk, high-reward vehicle for people who want to use margins smartly and can stomach drawdowns. The kind of investor who knows how to hedge, how to rebalance, and isn't scared of waking up to a 15% drawdown after Bitcoin sneezes. If that's you, then MST might just be a powerful tool in your kit. If it's not, then admire it from afar. Seriously. So, let's bring this full circle. MST is one of the most unique ETFs on the market right now. It takes the volatility of MicroStrategy, mixes it with options income, sprinkles on leverage, and serves it with weekly payouts that look absolutely insane on paper. The 99% yield? Real, but not guaranteed. The upside potential? Massive, but tied to Bitcoin. The risks? Elevated, but potentially manageable with the right strategy. Todd personally combines MST with hedges like inverse ETFs to help manage the downside. And that's a smart approach. Because if you're going to dance with leverage, you better know the rhythm of risk. So the bottom line, MST is not for everyone. But for Bitcoin bulls who crave income, understand leverage, and want to play offense while staying tactical, it's a fascinating ETF to watch. Just remember, in the world of high yield, nothing comes for free. You're getting paid for risk. Make sure you understand what that risk looks like. Because when the music stops, you don't want to be the one left holding the bag. If you found this deep dive helpful, drop a like and subscribe for more brutally honest ETF reviews like this one. Let me know in the comments, do you own MST? Are you sticking with MSTY instead? Or are you staying far away from leveraged Bitcoin plays? I'd love to hear your thoughts. Until next time, stay sharp, stay diversified, and don't chase yield without knowing what you're chasing. See you in the next one. Would you like me to continue this series with a future update on MST's performance and yield sustainability?